India's tax system has seen many reforms over the years, but the launch of the Goods and Services Tax in 2017 stands out as one of the biggest. Building on that, Prime Minister Narendra Modi, in his latest Independence Day speech, spoke about introducing next generation GST reforms. The proposal on the table is to simplify the current multi-slab structure into just two main slabs, 5% and 18%, while keeping a special higher rate only for luxury and sin goods. In this context, let's look at what could this mean for businesses, consumers, and state governments. Will your everyday essentials become cheaper? Will the government lose a big chunk of revenue? And what does the rising revenue from GST collections say about the Indian economy? But before we dive deep into these questions, let's take a quick detour. If you are also a data nerd like us and are interested in seeking reliable data-driven insights, do check out Dataful. Trusted by over 26,000 registered users, it offers more than 17,000 clean, structured and ready-to-use datasets across 50 plus sectors, exclusively sourced from government and multilateral agencies. To know more, click the link in the description. Now back to the story. Did you know that GST collections have tripled in just 7 years? From around 5.4 lakh crore rupees in 2017-18, they have jumped to nearly 16.8 lakh crore rupees in 2024-25. That's a massive leap in just 7 years. This growth is not just about taxes, it's also a crude indicator of how much economic activity is happening in the country. More goods and services being sold means more tax coming in. Here's another fascinating insight. Maharashtra alone collected nearly 3.6 lakh crore rupees in GST last year. That's more than twice of what Karnataka did, which stood at about 1.6 lakh crore rupees. Gujarat, Tamil Nadu, Haryana and Uttar Pradesh also crossed the 1 lakh crore rupees mark. And if you look at the bigger picture, the top 10 states each collected more than 60,000 crore rupees in 2024-25. This shows just how vital GST has become for state finances. No wonder some states are anxious about the proposed reforms. They fear losing revenue if the structure changes. But here's where it gets even more interesting. Most of India's GST revenue actually comes from just one slab, the 18% rate. In 2023-24, this slab dominated the collections by a wide margin. That's why policymakers are debating whether GST should be simplified into just two main slabs, 5% and 18%, while keeping a special higher rate for luxury and sin goods. For consumers, fewer slabs could mean more transparency in pricing. For businesses, compliance might get easier. But for states, the worry is real. If revenues fall and there's no GST compensation from the center, budgets for infrastructure building and implementation of welfare programs could be hit. So what do you think? Should India go for a simpler GST with fewer slabs? Will it make everyday goods more affordable for consumers? Share your thoughts in the comments. We'd love to hear what you think. Research for this story is powered by Dataful and Tagore.ai. To know more, click on the related links in the description.